And investors are also obsessing over the Fed. As we reported Friday, the strong jobs report raised questions about whether the central bank policymakers will lower interest rates when they meet later this month. And investors may get some new clues when the Fed chief testifies on Capitol Hill later this week. Steve Liesman has more.
In 2 days of testimony this week before Congress, Fed Chairman Jerome Powell has a tough choice. He can affirm the market's deeply seated belief in a rate cut coming at the Fed's meeting later this month, or he can push back. In pushing back, Powell faces the risk of a sharp market sell-off and more criticism from a president who has raised the prospect of firing Powell if he doesn't cut rates. Powell has reasons, however, to side with both the president and the markets.
The signaling has been all about inflation not meeting target, heightened risks from overseas slowing growth, and trade uncertainty, which still has the opportunity to hit the real economy here in the U.S. And we see the G20 as simply being neutral, slightly positive in that tariffs were not put on, but the trade war is alive and well, and that uncertainty is alive and well while current tariffs remain.
Despite the strong jobs report Friday, markets still have 2 rate cuts priced in. Fed funds futures still see the rate falling from about 2.4% now to 1.9%, maybe as soon as September. And markets are split over whether there's even the chance of a third cut this year. It's anything but textbook monetary policy for the Fed to cut rates at a near record low unemployment amid the longest post-war era expansion. So what will Powell do?
I don't think he's going to come out and be very specific, because after all, the Fed meeting is at the end of the month. But the fact is, his assessment of the economy, if it changes at all, any of the words that he really just used at the previous press conference just a few weeks ago, if anything changes, the market will be paying very close attention to whether it's an upgrade, a downgrade, or the same.
The trouble for the Fed chair, if he doesn't tell the market it's wrong about expecting rate cuts, the market will assume that it's right. For Nightly Business Report, I'm Steve Liesman.